Okay, let's start, my dear friends. Greetings from Manila to all my colleagues and friends in Accra. Today we are favored by an executive team from the Asian Development Bank to be briefed on green, social, and sustainability bonds, a subject of particular interest to credit rating agencies like us, and which the United Nations calls one of the most significant developments in the financing of low-carbon, climate-resilient investment opportunities. This webinar today continues a stream of knowledge-sharing events that started last December 2020 with an Accra webinar that featured Mr. Satoru Yamadera, also of ADB. As you will be informed in more detail a little bit later, we shall also hold a webinar on a greener, better new normal post-pandemic, on March 24 this month, co-sponsored by the Asian Bankers Association and ourselves. So, green is the color of the month. I noticed a good participation from Accra members in this webinar, and I greet particularly the CEOs of Infomerics of India, Mr. Basan Bajai, who is fairly new to Accra. And we have a new CEO for Care Limited, Mr. Ajay Mahajan, and also for Malaysian Rating Corporation, Mark, we have Mr. Jamaluddin Nasir, the group CEO. And from Pakistan Credit Rating, Pakra, Mr. Shazed Salim. So these are the new CEOs coming on stream in our Accra activities. And of course, I must mention the President Director of Pefindo, Mr. Salyadi Saputra, whom I've been missing lately but has resurfaced. Now, let us hear from the Chairman of Accra, Mr. Atsushi Masuda, who will officially welcome us to start the proceedings. Masuda-san.
Santi-san, thank you very much. And good afternoon, everybody. Greeting from Tokyo. It's 3 o'clock here in Tokyo. My name is Atsushi Masuda. I'm a chief analyst of the Japan Credit Rating Agency, and now serving as a chairman of Accra for a 2-year term of 2020 and 2021. At the opening of the ADB in Accra Green Bond Seminar, I'd like to make welcome remarks. First of all, I'd like to express our sincere thanks to the ADB and the ADB staff who have enabled this seminar on behalf of all the member agencies of Accra. Today, more than 70 staff of Accra Rating Agency have registered to this seminar. This number has reflected high level of the interests. I'd like to raise the following 3 points. First, sustainable financing became the mainstream last year. In 2020, total issue of the sustainable bonds reached $600 billion US. It has doubled from the previous year, even under the tough condition of the COVID-19 pandemic. Half of the issue is green bond. A quarter falls to the social bonds, and another quarter is sustainable bonds. Many sovereign and financial institutions accelerate social bond issue to respond to the COVID-19. Second, sustainable financing market is rapidly evolving. It's noteworthy that the market development is driven by the market force. Market players gather to formulate a new concept of the sustainable finance. It's not a regulation-driven market. I just introduced 2 new instruments, sustainable linked loans, bonds, and transition finance. Sustainable linked loan will increase incentive to utilize these financial instruments. Transition finance are the instrument which enable greater flexibility in sustainable financing. I believe this evolution will help substantially expand the application of the sustainable financing. Third, ESG rating is facing a challenge in delivering fair and informative evaluation. I think ESG rating is not a simple technical assessment on the environment and the social dimension. Sustainability is asking about long-term strategy of the business entity. Thus, credit rating agencies have a comparative advantage for undertaking this task since we have accumulated information on the viability of business strategy. ACRA working agenda this year, as Santi noted, include a series of web seminars which focus upon the ESG issues. This year, we are also stepping up our communication tools, including web conference through Zoom and the text discussion through Rocket Chat. We are expecting analysts of the ACRA member agencies are enjoying candid and lively exchange of opinion through those communication devices. Thank you very much. Santi, you have a vote.
Thank you, Mr. Masuda. Now I'd like to briefly introduce our three speakers, all in one sweep, so they can make their presentations without interruptions, seamlessly, one after the other, because their talks have been so nicely packaged together for all of us. We have revised the program a little bit and revised also the time allocation. As I don't know, can we show it? Can we show the revised program on the screen? We have revised it a little bit because we have reduced the number of speakers to 3, but we shall continue to keep our event within the 1.5 hours we have allocated for ourselves for your information. So let me now, after the presentation, by the way, we can have a very brief question and answer session, but we shall give preference to listening to their main presentations, which, as I said, has already been packaged rather tightly and comprehensively. Nevertheless, we have other ACRA webinars following, where we can continue to raise our questions and our comments. So there in your screen is our revised program, and I think we are on track. Let me introduce first Mr. Kosinter Pongsafor. We call him Pok. He is a national of Thailand, has been financial sector specialist in ADB since April 2016. He supports ADB's financial cooperation and integration team in promoting financial market integration in ASEAN and ASEAN Plus 3. He is also part of a secretariat team of the ASEAN Plus 3 Asian Bond Markets Initiative, or ABMI, and is an initiative established by the ASEAN, by the People's Republic of China, Japan, and the Republic of Korea to develop both local currency markets and promote regional financial cooperation and integration. He is leading the ABMI's initiative on promoting sustainable finance development in ASEAN 3. He received his master's degree in business and managerial economics from Chulalongkorn University in Thailand in 2007, and his bachelor's degree in economics and finance from RMIT University in Australia in 2003. So he comes with these excellent credentials. The next speaker will be Mr. Rob Fowler, who is a sustainable finance consultant for ADB. Rob is an expert in sustainable finance and green bonds with more than 25 years of international experience in climate change, sustainability, energy, utilities, heavy industry, oil and gas, infrastructure finance, regulatory regimes, and capital raising. That's a wide spectrum. Most recently, Rob worked for 5 years with the Climate Bonds Initiative, or CBI, where he assisted hundreds of green bond issuers, bankers, investors, and verifiers to navigate the new world of sustainable finance. Rob is based in Australia and has lived and worked in a number of Asian countries. In addition to his engagement with ADB, he is part of the team at Cicero Shades of Green. He is a member of the Australian Sustainable Finance Initiative and serves on a number of ISO groups driving the development of international standards for sustainable finance. So we have a real expert, even an expert of experts this afternoon. And the third speaker is Ms. Xu Tian, economist at Asian Development Bank. Dr. Xu Tian is an economist at the Economic Research and Regional Cooperation Department of the ADB. Prior to joining ADB, she was an associate professor of finance at Fudan University in China. Her main research interests include financial services and institutions, financial market development, investments, and empirical asset pricing. And so we can see that she comes from the groves of academia with very rich research credentials. Dr. Tian, or her friends call her Grace, works in the teams that produce the Asian Development Outlook and Asian Bond Monitor, which is a benchmark reference for policymakers and financial practitioners like us. So my friends and colleagues, let us welcome the speakers, starting with Mr. Pong Sopol. Pong, please take over.
Yes, thank you very much, Mr. Dumlao. And it is our nice pleasure to be meeting with all of you ACRA members. And we appreciate your time today and also your kind invitation to allow us to make a presentation on the sustainable finance topic for ACRA members. Oh, okay, someone is sharing the screen for me. That is excellent. Thank you very much. So can you all hear me okay? Okay. All right, thank you very much. So as Masuda-san mentioned, last year was an incredible year for sustainable finance. And if you can go to the next slide, please. We have also seen the record year, cumulative issuance of only the green bonds of more than $1 trillion already. And despite the COVID pandemic, that resulted in market volatility as well as a shortage of liquidity in the first and the second half of last year. The issuance of green bonds, globally was able to pick up and recovered actually very strongly in the third quarter and the last quarter of last year. So as you see from the chart on the left-hand side, can you previous, yes, please. As you can see from the chart on the left-hand side, we see that the yearly issuance of green bonds in 2020, despite a difficult time, globally, is almost the same level as 2019. And that brings the cumulative issuance to more than $1 trillion. And on the right-hand side, in terms of the use of proceeds, we see that the investments mostly go to the energy sector and the building and also the transport sector. And this is largely similar to what we have observed in the green bond market in ASEAN. So just to make sure that all of you are aware, ASEAN ADB is a secretariat of the Asian Bond Market Initiative, and we have been working very closely with the 10 countries in ASEAN, as well as the past three: Japan, Korea, and China. Next slide, please. And this slide also shows the, last year we have also seen a significant growth, not just green bond, but especially the social bond and also the sustainability bond as well. We have seen many issuers as well as sovereign governments decided to issue social bonds to finance, their healthcare systems and also to support implementation of various social programs to support the vulnerable groups who were highly affected as a result of the pandemic. And also many regulators have also promoted issuance of social bonds. For example, the Securities and Exchange Commission of the Philippines actually made a clear announcement that they would like to, see more issuers issuing social bonds to support the effort to contain the COVID-19 pandemic and also to manage the resulting socio-economic impacts as well as to build resilience to future shocks. So, and also the Thai government has issued the ASEAN's first sustainability bond to finance the green infrastructure as well as the social impact projects. For example, for example, the healthcare measures, job creation, and also providing, financing to small and medium-sized enterprise in an effort to help the country recovery from the pandemic. So next slide, please. And we hope that this sort of momentum will continue again this year. And as Mr. Dumlao mentioned, my colleague Grace, she will explain in more details about the social bond market in developing Asia. From the investor's point of view, we see that countries with positive ESG momentum actually yield higher returns. I got this from the Franklin Templeton report, and they look at the yield of the government bonds, by factoring out the macroeconomic and risk factors. So this is solely on the ESG elements, and they see that countries with ESG practices actually performs better than countries with without any ESG practice. Next slide, please. And this is also actually consistent with the global development. As investors are looking for more ESG investment opportunities, global investors will incorporate ESG. As you can see, on the left-hand side, this is the principles for responsible investment. As you can see, global investors will incorporate ESG issues in their investment analysis. So more and more corporates who wish to attract new investors will need to improve their internal governance, consider how to integrate ESG as part of their financing strategies and also their business operations in order to make sure that their business will be sustainable and more resilient. And this is exactly where the role of the local credit rating agencies will come in. And it will be highly relevant and beneficial to support sustainable capital market development in your respective countries. Next slide, please. And this slide, I took it from the CBI report, which they survey the treasurer of companies that have issued green bonds. And about 10% of respondents are from Asia. So, as you can see, almost 100%, 98% of the respondents said that the green bond actually attracted new investors. And more than 90% mentioned that the green bond actually facilitated more discussion with the investors as well. When it comes to the reputation and visibility, almost 90% said that they will of course issue new green bonds again, right? They will issue this kind of bonds on a more regular basis, and this actually help with their internal corporate governance as well, as companies become more conscious about the impact of climate change and how their business will be more sustainable or resilient to future shocks. And also, one of the key issues is that most companies, especially most treasurers, will have a concern about issuing green bonds often incur additional costs. Of course, there are fees to engage external reviewers or external verifiers, and also the cost to set up the internal framework, to develop internal framework, and also to develop the internal systems to track the allocation of the proceeds, and also to make sure that the companies can continuously report on their impact and also to inform investors about the impact of their investment. So these are additional costs that companies or issuers need to consider. But as you can see that almost all the issuers said that these additional costs can be negligible as compared to the other benefits that they would get, right? But of course, given that, especially in our region where the green bond or sustainable finance market is still in the developing stage, about 90% of the respondents saying that the cost of issuing green bonds or cost of borrowing is still, somewhat similar or only slightly lower than vanilla equivalent. But this is something that we need to make a start. In the previous slide, I talked about more and more global investors wanting to seek more ESG investment opportunities. So what we often inform the issuers that if they look at the cost of borrowing, they should look at the cost in the long term, not just for this particular transaction, right? And of course, once we have more diverse investor base in our country, or if the companies can attract more investors to the green bonds, of course, in the longer term, that might make their borrowing costs more competitive. Next slide, please. And we have two examples. The first one is from the Bank of the Philippines Islands. They have issued quite a number of sustainable bonds, both green, social, and sustainability bonds recently, and they are one of the most regular issuers in the Philippines market. It was also the first ASEAN company to issue the green bonds in Swiss franc based on the ASEAN green bond standard. And this actually, carried a negative yield, so the coupon was 0. So the demand is already there, especially from the European investors. It's just a matter of how we market our securities. We do the marketing of our company to those kind of investors, right? And of course, this transaction was about 3 times oversubscribed. And another example below is by the BTS Group from Thailand. For those of you who have been to Bangkok, BTS Group is the operator of the SkyTrain in Bangkok area. And they also issued 2 green bonds already. And the bonds was heavily oversubscribed by the local and institutional investors and also the high net worth individuals. So this shows that demand for this kind of securities is already there, but it's just a matter of creating more supply to meet the demand, right? And how to create more supply is very important, and also the engagement among relevant stakeholders is also important. So if you can go to the next slide, please. We have came up with 3 of the major players in order to help a country develop the sustainable finance market. First, of course, the government need to take the leading role by providing the clear strategic guidance and also the clear national policy in order to accelerate sustainable development. As I said, one of the good examples is the issuance of the ASEAN's first sovereign sustainability bonds by the Thai government. That was only in August last year. And according to the Public Debt Management Office, the bond at the time of the issuance attracted the interest rate, which was lower than the existing market yield of the 15 years benchmark bond, right? And other than the Thai government, the Indonesian government actually was the first country in ASEAN to issue green bonds. They call it green sukuk. And those bonds have been issued regularly from 2018, 2019 to 2020, right? So the government can be seen as a leading by example if they want to promote this kind of instruments in their respective country. So second is the central bank. We mentioned about central bank and financial institutions on this slide because I believe most of our countries, the financial systems are dominated by banks, right? Many corporates are still relying on bank loans. So in order to accelerate this development, the central banks also need to play a significant role. in promoting the sustainable finance market as well. As you know, ADB participated in the network for greening the financial systems last year, and we're happy to share that the global central banks are discussing about how financial institutions should undertake the scenario analysis so that they have better understanding on to what extent their existing portfolio has exposure to climate change, how much of their portfolio is financing projects that are vulnerable to climate risk, right? And this is something that the regulators are discussing. And also the NGFS last year published a guide for supervisors integrating climate-related and environmental risk into prudential supervision. And this is to provide common starting point for analyzing climate risk to the economy as well as the financial systems in general. And also, as you may know, the ASEAN central banks is also pursuing or pushing the sustainable banking agenda among the central banks and the ASEAN government as well. So this is at the regulators level. The direction is quite clear. But when it comes to the financial institutions, as I said, it's also important for banks themselves to assess their existing exposure to financial risk. Also, it's important to develop and implement sustainable or responsible lending framework to serve as a guidance for banks to establish a responsible lending strategy. This is to manage their environmental and social risk. Also, one of the most important role that financial institutions can play is that they can be the one who collect climate-related data from and also to provide loans to the borrowers. As you know, for regulators, for policymakers to introduce the right measures or the right policies, data is very important. But at this point, no one knows, how much the bank's balance sheet is being exposed to climate risk, right? So that's a good starting point. And going forward, I'm sure financial institutions and also the regulators in your respective countries will put more emphasis on these issues. Right, and next slide, please. So going forward, I think it is very important for all of us to efficiently mobilize financial resources that we have to address the global warming and climate change. It's not just an issue of a company, a country, it's global issues, right? And of course, for businesses themselves, they will also need to integrate ESG as part of their financing strategy. As I mentioned earlier, all the major stakeholders, especially governments, the policymakers, and even investors themselves are putting more emphasis on ESG. And firms or companies will need to review their existing operations and to decide how they can contribute to a better world. And also access to finance and continuous stakeholders engagement. It is very important for firms to be more sustainable. But when I say stakeholders, it's not just about the regulators, their customers, but it's all the supply chains of their management, their business partners, their suppliers, local farmers, the local communities where the factory is located. So these are all their stakeholders, and continuous engagement with all of these stakeholders is very important. And of course, their mindset will need to be changed. It's not only looking at how do I achieve the cheapest funding as possible? It's not that anymore, but we need to look beyond that. How to make our business more sustainable. We do not know that issuing green bonds will actually yield a lower funding cost immediately, but going forward, as we have more investor base, as the companies become more cost conscious about environment, they continue to make disclosure about how the climate change is impacting their business. This will actually help the companies actually more sustainable in the longer term. So this is where the role of local credit rating agencies can come in. As you know, local rating agencies possess in-depth understanding of the local market. The market practice, the market environment. So it is feasible for local CRAs to perform the role of external reviewer or green bond verifier. This is to help local issuers to with their issuance of thematic bonds. And of course, being in the same country with the issuer, you speak the same language, right? So it's much more easier, and also this can be seen as part of the major ecosystem for countries to scale up their green finance or their sustainable finance market. So I think that is my last slide. So hopefully I give you the importance of sustainable finance market, and also the discussion that is being discussed at the global level, which I'm sure not anytime soon, but in the future it will need to be addressed in your local market. So I'll stop here, and then I'll come back and explain about how ADB can actually support issuers to go through this process in my next session. Thank you very much.
Thank you, Bob, for your presentation. I would like to inform the group that we will have these slides available to all those registered participants. That's just so that you can look forward to receiving copies of all these slides in this, if you are a registered participant. So we will have a question and answer session after everybody has spoken. So may I now call on Mr. Rob Fowler to make his presentation. Rob?
Hello. Hi, can you hear me okay?
Okay.
Fantastic, hi. Thanks very much, and welcome everybody. This is a great group of people and a really interesting group across the region, so fantastic that you're involved. If you could share the slides, that'd be great, and I could walk through them. So as an introduction, I've had a lot of experience in this market. I've trained a lot of verifiers. I've worked with a lot of credit rating agencies who've decided to shift into this green bond and sustainable bond space. And so my email address is in the slides. If you have any questions at all, please feel free to send an email. My task with ADB is to help and help and help. And so if you have any questions, please feel free. It's easier just to get in there. You can see my email address right there. Okay, next slide, please. So my objective here is to try and explain some of the terminology, how this works, how it all fits together. It's quite new for a lot of people, and there's a lot of new words coming out. And if you're not in the green space, it can be a bit confusing. So here we go. Essentially, ESG and sustainable finance, these words that are going around, are really two sides of the same coin. I've got a Filipino coin here, a nice new one. On the ESG side, it's all about risk. It's a risk focus. It's looking at how the environment, social governance aspects of an organization or its financing or whatever is going to flow through, and how are these things potentially going to impact on the financial and credit risks that we're normally used to looking at. So ESG risks are really a screen or another layer of selection that investors are using, and they're expecting companies to have their own story about how they're integrating ESG as well. So investors are using ESG to screen out investments with high risks in that space, and that's resulting in some nice returns, some positive returns for those selected companies. But it's also a movement that's going quite strongly across the world. Now, the other side of that coin is about the impact. So ESG is mostly about risk. Sustainable finance is about the impact. So what is that finance actually doing on the ground? What are the positive impacts, or what are the green credentials of the investments? So that's really looking at the positive side of things rather than the risk side. And it's really useful to understand those two different sides. Now, again, investors like sustainable finance because it helps them to identify which investments are more likely to survive into the future and be ready for a future of low carbon or more sustainable way of doing things. Next slide, please. So investors are really diving into this stuff. This is a chart about the US, and as we know, the US has been a bit slow sometimes in taking some broader steps, especially in the administration we've had in the last 4 years. But you can see the investors don't really care. The investors are speaking with their money. So it's very interesting to see the movements in investor preferences. In ASEAN, it's happening as well, not as quickly, but the EU and the US and Japan and even China are well ahead of this sort of trend. And so it's It's something that's happening around the world. Next slide, please. Now, as we've seen in the previous presentation from POC, the volume of sustainable finance issuance is growing dramatically. It really is, but it's just not keeping up with the demand. And so we're seeing a lot of oversubscription for all deals that are labeled, whether it's social or green or sustainability linked. The investors are piling in. Now, the fact that there's a lot of different types of flavors, green, social, sustainable, all these things, is good. It really helps the investors to create a more diversified portfolio while still being all green. And that's what they're really after. So they're looking for areas which haven't been as well represented in their portfolios. And that's where we're starting to see industry and other heavy industry come into it. Now, asset managers are a big player in this game, and they are soaking up a lot of these bonds so they can then offer them in their products to the next layer of investors. So it's important to understand the different layers of investors who are involved here. There's an investor at the top that gives a mandate for these sorts of green and sustainable things. And then the asset managers are responding to that by creating products and therefore buying these things to put in their products. Okay, next slide, please. Now, there's lots of different flavors in sustainable finance, and the list is growing all the time. I've put down a few examples here. So there's some examples there on the left with green environmental focus, and then there's some social focus examples. But the list of social ones is growing. This is not the only thing that's happening. There's just some interesting ones. In the green space, we'll start there. We'll start with the environmental focus. Now, green was the first labeling that we saw in the bond market, really, way back in 2007. Some investors from the Scandinavian countries said they wanted to do something about this climate change thing, and they contacted the World Bank, who they often buy bonds from, and they said, hey, can you isolate some of your investments that are already ready for a low carbon future? So can you give us some sort of immunity to climate risk with an investment? And that's where it started. It's grown and grown and grown, and green has been the main flavor. But there's always been a very strong climate focus, and more climate change is becoming a hot topic internationally as well. And it's translating down into real action by governments. Not fast enough, in what the science tells us, but it's still happening. And so climate labeling has also been popular. The Climate Bonds Initiative has championed that, and I worked with them and created the Climate Bond Standard. So that was a very sort of robust way to identify what is already consistent with a low carbon future, a climate resilient future. And so it was trying to create a very clear binary sort of outcome. This is aligned with the climate futures, this is not. We've also seen blue. Now, blue is the interesting one, especially in ASEAN, because it covers oceans. And ocean sustainability and ocean finance is going to grow dramatically in the next 5 years. This is something which is really taking off. Nature-based activities and natural capital are getting a lot more attention now, and people are trying to figure out how to finance these things, usually with longer term and low cost debt. Now, as was mentioned earlier, transition is something that's happening really quickly now. And that's an area where industries that aren't green yet, but want to move to a more green position, can shift across. But what they're doing is not necessarily aligned with the low carbon future and green future, but it's an improvement. And so that's where we're starting to see a lot of heavy industry get involved with oil and gas and cement and materials and that sort of thing, start to put forward their plans. And they can't really label them green, but they can label them transition. And so transition finance is going to have a big future in this region. So that's the green space. There's lots of other green flavors, forest bonds and other stuff like that. We're going to see a lot more, but they're the main ones we're seeing at the moment. On the social side of things, this is a less evolved or a less developed area. And we've seen a massive increase in social bond issuance in the last couple of years for good reasons. And so pandemic is one of the labels or one of the themes that we've seen with social. We're also seeing quite a bit of gender as a theme for social. And of course, microfinance has been a strong aspect of how to bring financial services to underrepresented areas. So those are the ones that we're seeing already. Catastrophe bonds are an interesting structure, a bit different. And as a credit rating agency, I'm not sure if you've ever touched those in the area, but they're trying to basically put forward a debt instrument that pays off if there's no catastrophe, but if there is a catastrophe, then that money is used for rebuilding. And so that's an interesting structure that we're seeing a bit more of these days, especially in the reinsurance market, so the really high, big areas. Now, in the social space, we can also see health bonds or food security bonds or agricultural sustainability bonds. So the social area is still emerging in terms of the different themes that investors want. And of course, what products are being brought out. So there's a lot of innovation that can happen in that space. Now, if you have a bunch of green stuff or environmental stuff, if you also have some social stuff, you can put them together and you can call that sustainable. So sustainable bonds is usually covering both of these environmental and social areas. And we're seeing more and more of that happen because it's getting tricky to find all the green assets that the investors want to see. In terms of sustainability, we also have this broader sustainable development goals as a thing that's a global agreement back in 2015, trying to reach a more sustainable existence by 2030. And so that's a theme that a lot of entities are using now, if they have a very broad range of different things that are adding and improving lives. So SDGs are sometimes used as the main theme, but what we're also seeing is that most investors want to sort of get a sense of how it works with the SDGs. And so a lot of issuers of bonds are laying out in their frameworks and in their documents, these are the SDGs that we cover. These are the ones that are impacted by what we're doing. So it becomes a sort of framework that a lot of investors like to see. Now, on the right-hand side there, you can see the different instruments that we're seeing, and there's a range, a huge range. Even within bonds, we've seen 10 or 20 different types of bonds that have been put through with a green label or with some sort of label. We're also seeing a lot of loans, and in markets where the bond capital markets are not yet mature, the loan market can be very useful, and investors higher up the chain are looking more and more at that. We're seeing a lot of private equity and mid-cap funds being created to do that loaning. And it's also a way that banks can label the loans they have to their clients for facilities on the ground, and then they themselves can issue a labelled bond into the market for refi, and so the labelling flows through, if that makes sense. So they've got a book of loans that they've labelled green, and then they can wrap those up and label a big bond as green. Everyone loves it. Now we're seeing Sukuk, of course, very interesting structures, especially in some parts of ASEAN, that'll continue to grow. We're seeing asset-backed securities, residential mortgage-backed securities, we're seeing all sorts of different structures. And those two are useful because they can bring together smaller assets into structures that can be much larger and big enough for the capital markets. Of course, above that, we're seeing all sorts of entities create funds. They need to have all the product in their funds. We're even seeing exchange-traded funds for green and sustainable themes. And of course, indices are flowing on. So the market is gearing up. It's becoming more of a mainstream topic. And so we're seeing the information providers react. Okay, next slide, please. Now, at the moment, there are two different structures being used in sustainable finance. The vast majority of them, of the deals we've seen so far since this began, have been the use of proceeds structure. And we'll use that as a term of art, okay, use of proceeds structure. The other side of it is sustainability linked. Now, this is a fairly new part, and it's where a company who doesn't really have lots and lots of green assets can still contribute to this sustainable finance space by saying, here's a transaction, a capital raising, maybe a revolving credit facility that needs to be funded. I'm going to improve the sustainability of my operations here, or I'm going to try and reach this target for reduced emissions, or this target for reduced waste, or something like that. And so they're trying to set up a situation where if they reach that target, then the cost of funding reduces. And so it's creating an incentive for the borrower to really sort of put together a plan and lay out an improvement plan over time. And that's a really interesting topic, a really interesting thing. We're not going to talk much about that in this session, but it's a new area, and the approaches, the way you do it is all forming. And so it's a very hot area for investment bankers to push out deals, and that's great. We're going to focus on the use of proceeds structure on the left there. That's the majority of activity here, and that's where a lot of people are starting to get their get their first experiences with sustainable finance. And now the use of proceeds structure is very interesting because it creates a way that an investor can see all the way through whatever sort of funds or other structures there are to the core assets which are being associated with the deal. And so it's a really nice line of sight that investors like to see. Now, it's interesting because it takes this concept of use of proceeds, but what an entity usually associates with their bond may not actually be what they're using the cash for. Now, this is a really interesting part of it, because if you look at a transaction, maybe a capital raising, there's usually some sense of what it's going to be used for, or at least it's going into general purposes. So that the credit analysis is, of course, dependent on that. Very, is hinges on a bit of that. But when there's a label, what they're trying to do is say, okay, I already have all these green assets, or I've got these green plans, and this is what I'm doing in green. And you can stack all those green things up, and that's the use of proceeds from a labeling perspective. So it's a bit different. It's the same term, but it's used differently in this space. Now, this is a really interesting part of it, because what it creates is a need for definitions. So you look at your portfolio of stuff, whether it's assets or costs or other things like that. You say, okay, what is green enough? I'm not really sure. So definitions become really important. And so what we've seen is a lot of work on definitions over the last few years. It's interesting though, because it's getting harder for investors to find the deals and the issuers to find the assets. So we're hoping to see this supply come forward to satisfy the growing demand. Next slide, please. So for use of proceeds, there's a sort of good practice that everyone observes. It's something called the green bond principles. Now there's also social bond principles, sustainability bonds. It's the same sort of stuff. It's just a different flavor of the assets, but it's the same structure and the same process. So the green bond principles have been established by market players. It's not a government thing. It's an international approach that says, here's some recommended ways to look at this labeling. Here's what investors want to see in terms of transparency on these topics. And here's a process which everyone can look to and say, okay, that's good enough if someone follows that. Now that's been a really useful platform. And what we've seen is that all the governments around the world who are preparing their own regulations or their own guidelines for green bonds are using this structure, the green bond principles. There are 4 pillars and then external review. So it's a great structure that's been created. It's great that it's been led by the market, not so much by international governments, but it's also creating a platform for others to follow. Now, definitions are where there's a challenge, because the green bond principles didn't set out to create a list of green stuff. They said, here's some categories you can look at. Here's some indicative project categories for what's green. But they didn't say, this is in, this is out. This is this is green enough, this isn't. That wasn't their job. So what we've seen is a lot of definitions being created. Now, sometimes it's by the issuer themselves. They can create a good story, and here we go. But often it's being put together by a larger group because the investors want clarity. And what I've seen is a lot of investors don't really know much about green. And that's okay. That's quite fine. But they want something that says this is green enough, this is not. And so we've seen this concept of a taxonomy emerge. Now, this is a word that's used in science, mostly biology, to look at different species and how they are categorized and different and the same. And so it's a term of art, I suppose, to use it, but people have accepted it as a catalogue or a list of definitions or a way to categorize different types of things so that they meet a certain definition. So it's an interesting time. Everyone's trying to create a taxonomy. We've got one in Europe now, which is being implemented and is incredibly complex. The investors are finding it very hard to use. We've got one in China, which has been there since 2016. That's more of a project list, project catalogue, so it's much easier to use. And we've seen lots of different countries start to say, yes, I'm creating a taxonomy. Now, the idea here is that we have a globally consistent set of definitions, so investors are comfortable with what they're doing, they understand what they're doing, but we also need locally relevant definitions, because activities in Sweden are inherently going to be different to activities in Indonesia. And the context and the culture and all the other things that flow into this have to be considered. So globally consistent, locally relevant. That's what we're trying to get to. Now, ASEAN, I understand, is in the process or is starting to create a taxonomy for the region. And I know a few countries are trying to do their own as well. So it'll be very interesting to see how ASEAN creates definitions over the coming years. Next slide, please. So what we see is a lot of investors are happy about this sort of transition because it makes it easier for them to use existing processes in existing investment structures like bonds, loans, and that sort of thing, but also tackle this green challenge they have or sustainability challenge. So investors are quite happy with the way this works. They're buying bonds, they're looking at the credit, they're doing the same thing they've done before, but they know that if there's a green layer on it, green label or social label, that's good for their other targets. So from an investor perspective, it's quite smooth and it is going well. And often these assets, because they're in high demand, they perform really nicely on the secondary market as well. Now, from an issuer or borrower perspective, they're getting a pretty good deal as well if they can do the effort to create this label. Now, they're getting a lot of diversification of investors, and we're seeing investors go into areas that they haven't been before or discover transactions that they wouldn't have found before. So this labeling is really much a marketing thing for issuers or borrowers. They find that the investor is much more interested in the situation. They want to know more about the situation. They want to know more about the company. What are they doing? How are they growing or being sustainable? And so the engagement that the investor and the issuer have are deeper when there's a label than if there isn't. And people find that useful if they're trying to raise money over time. They're going to go out to the market a few times in a row. Having that stickiness of investors is really good. And of course, they want to get a better price, no doubt about it. And what we've seen is because there's such high demand for labelled product, that if you've got a good investment banker who's running the transaction or someone who's running the transaction, you put a good band in there to start with, it'll compress nicely across that process because there's usually such oversubscription. So if you can set yourself up to move down the band of a pricing arrangement, then you're going to come out well. And of course, this is marketing. This is how a company can say, hey, I'm doing sustainable stuff. Look at what I'm doing. And here's the finance aspect to that. So it's very complementary to a company who's trying to position themselves as a sustainable entity within a market. Next slide, please. Okay, so that's really some of the concepts and how it works. Hopefully that makes some sense to you. The process for labeling is quite intense, but as Poc said earlier, almost all treasurers find that it's challenging to start with, but once it's done, the transaction they come out with is so much better that they're happy to do it again. And the reality is that if you go through this labeling process, then you're setting things up to be able to label again and again and again and again with minimal effort. So the effort is all up front. The first one's hard, but the third one's much, much easier. By the time you're doing your fifth one, it's business as usual. So there's an upfront effort, but that can really pay off over time if you're going to go back to the market again and again. Right, next slide, please. So the ADB has been supporting the Asian Bonds Online website. I recommend you go there if you're not familiar with it already. We now have a green bonds area in that web page, and there's a series of detailed fact sheets which are available. They basically lay out in a lot of detail how this works, what you need to do, what are the steps, what are investors expecting, what are the pitfalls and the traps. And so if you can look to this material, it'll help you a lot if you're going to understand the process in more detail. And you'll see where the risks are, you'll see where the important steps are. Now, these are being translated. So they're in English, available on the website now. They're being translated into Vietnamese and checked by people in the markets in that country. We're doing it for all the languages, I believe. So that's going to be a fantastic resource for people. Now, if you just go through the next slide, please. All this material is quite pretty and colourful and very detailed. And so it'll go through certain parts of this, which are important, such as what are the project's assets and expenditures you can include? Is it just CapEx? Is it OpEx? How far back? How far forward? That sort of thing. Next slide, please. The Green Bond Framework, or the Sustainable Finance Framework as a document, is a really important part of this process. Now, there's a lot of steps to go into what goes in there. Once it's done, it lasts quite a long time. And so there's a process there that we've laid out to try and help people understand what this means. And as a verifier or someone doing a review of these kinds of deals, the Green Bond Framework becomes the central point of understanding what's going on, what are they putting forward, how does it work? And so this is an important document for verifiers or external reviewers, as well as for the issuers and the investors. Next slide, please. Now, external reviews, which is something that, of course, a lot of credit rating agencies have started to do, is a very important part of this process. And these are some steps that go through it from an issuer's perspective, but we also have training opportunities and training materials for verifiers and external reviewers. So if you'd like to learn more about this process and how to gear up for it, what skills you need, what are the steps, how's it different to a credit rating, we're happy to provide that sort of information in a detailed session. So please be in touch if you want to go deeper into that topic. Next slide, please. Now, reporting is something there's a lot of discussion about, and so we get into a bit of detail there, but different types of reporting are also going to be part of what is being checked and what investors are really focused on. So one of the aspects here is to understand what is going to be reported in the future, how that information is ready to go at the early part of the transaction. Next slide, please. And in the interest of time, I'll spend a couple of seconds here and then finish up. There's been thousands of issuances with labels on them. And so there's been a lot of experience and learnings from those. One of the key ones is that this is really a marketing tool. So it really is about the issuer increasing or enhancing their position around this topic. Whether they choose the green topic or the social topic, or they take a broader SDG topic, it's about driving their marketing and labeling and branding across that. Now, transparency is what investors want. And so a lot of investors don't really know what they're looking for in terms of information, but they really want transparency. And that's one of the key differences actually between a labeled transaction and what we've seen in normal transactions, where there's extra transparency about what's going on, what are the sustainable angles or green things that are happening. What we've seen is that this trend is increasing. We don't see any reason why it's going to change. We don't think this thing's going to go away. And even others around this, the ASEAN market, are also seeing that as a very enduring trend. Now, pricing benefit is possible, if you do it right. And if you have a nice story for the deal and get some different investors and get the demand thing going on, then you can definitely get a price benefit. But other benefits actually dominate for a lot of issuers. They love the fact that they have different investors to talk to. They love the fact that they have a deeper interaction with the investors. And they really like the fact that most investors with a green mandate are longer term. They won't buy and sell. They'll sit on the paper. And of course, as POC described, almost all treasurers who label a transaction want to do another one. Whether it's because they got some media attention, that's what treasurers really don't get very often, or it's because it really did make a difference to them doing a good capital raising and being ready and better prepared for the next time they need to go to the market. That's it for me. I hope that's a useful dialogue. Please reach out if you have any questions. And as I said, we're happy to provide more detail around some of these processes and the roles of external reviewers. Thank you so much.
Thank you very much, Rob. That was a very comprehensive presentation, and actually you have given a lot of items for the agenda for CRAs to discuss. But anyway, let's continue with our proceedings let me call now on Grace to make her presentation, and after that we'll have, I hope we have time for some question and answer interchange. Grace, may I call on you, please?
Thanks, Mr. Damlau. Good afternoon, everyone. I think we are slightly behind time, so I will fast. So shall I share the screen myself, or you share from your end? Okay, maybe I share from my end. Sorry.
Okay, take your time. Take your time. We want to listen to you.
Okay. Okay. It's already here. Okay. I would like to present to you today our recent report on social bond market, the recent development trend in Asia. The report was released February this year, and then it is available on Asian Bonds Online, the Green Bond page. So if you're interested, please go there and check. Next slide, please. Very briefly, social bonds, fixed income instruments whose proceeds is used to finance projects with social benefits. So according to ICMA, there is green bonds, social bonds. Green bonds is those to finance environmental benefits, and then sustainability bonds can be used to finance both green and social projects. Next slide, please. In terms of the social bonds, ICMA revised their social bond principle in 2020, basically to reflect social needs related to COVID-related. For example, socio-economic advancement and employment support. Those kind of social areas were highlighted in 2020 due to COVID. The social bond largely targets to the vulnerable and marginalized populations outlines in the bottom section of this slide. So different types of vulnerable groups like women, aged group, educated group, and then poverty, people who live below the poverty lines. So they are targeting marginalized groups in the economy. Next slide, please. From this slide on, I would like to give you a general review of the recent development in social bond market across the world and then also Asia. So in this slide on the left-hand side chart, we would like to see that the global ESG bond market is still largely dominated by green bonds. So the first group of bars we can see. As of end of last year, green bond issuance globally reached to around something like 240 billion USDs. The growth is moderating from previous year, only 4% of growth. What we do see is the social bond growth is fastly expanding last year. So the social bond is the third group of bars on the left-hand chart. So by the end of last year, social bond issuance globally reached around 150 billion, which posted 720% growth. That means 7 times growth. So it's really a fast expanding area in ESG bond. Social sustainability bond is the group of bars in the middle between green and social on the left-hand side chart. By the end of last year, social sustainability bond issuance was around 66 billion USD worldwide, posting 77% of growth. So social bond was actually the fastest category in terms of ESG bond market last year. The right-hand side chart shows the current composition of global ESG bond market. So green bond account for slightly more than half, and then followed by social bond 1/3, and followed by sustainability bond 15%. Actually, the 1/3 of social bond was largely driven by the expansion last year. Next slide, please. This slide actually shows the global social bond market in terms of structure. So the left-hand side chart is about the social bond market by type of issuers. From what we can see is government agency issuers dominate the global social bond market, accounting for more than half of the issuance. So the bottom areas, government guaranteed, government-owned, local authorities, sovereign treasury, those kind of categories on the left-hand side chart accounts for more than half of the current global social bond issuance, followed by supranationals, around 1/3, 22% on the left-hand chart. The pure corporate, private sector corporate issuance is still relatively small. This is very similar to the starting age of green bond market, also start with government and social supranationals. But as the market gradually expand, private sector issuers will contribute more. For example, like green bond market now, more than half of the green bond market is issued from the private sector corporations. So it takes time for the market to develop. But the government agencies are actually first runners in when the market is in the early stage. Right-hand side chart shows the global social bond market issuance by region. So European is still leading, accounting for more than half of the market size, followed by supranational 1/3. Asia account for roughly 20%, and then the other regions accounting for the remaining. Next slide, please. Next slide, please. Yeah, this chart actually shows where Asia is. So if you see the left-hand side, we can see similar situation as the previous slide. So by now, the largest global social bond market is European, followed by Asia in terms of geography. And supranational is a separate class. 2020, we see the fast expansion in social bond market worldwide in different categories, but Asia posted the largest growth during the past years. You can see on the right-hand side chart, from 2017 to 2020, Asia social bond market posted more than 20% of growth, 20 times growth rate compared to European nearly 10 times. And then the rest of the world posted 15% of the market expansion. So Asia is really developing very fast in terms of market size. And then next slide, please. If we see the composition of Asian social bond market, we see that, well, it is led by high income economies like Korea, Japan, and Australia. On the right-hand side, the pie chart, we see that Korea and Japan account for 90% of Asia's social bond issuance. Korea is 48, Japan 42, and then the rest of the market share is Australia, and then some other ASEAN plus 3 markets, Asian markets. On the left-hand side, actually, what we can see is the bar charts. It's by 2019, actually, Japan is leading Asia's social bond market, but 2020, we see Korea is catching up quickly. So now Korea is the largest social bond issuer in Asia, followed by Japan and Australia. You may feel very curious, how come PRC accounts for so little? In these statistics, we followed by social bond issuance that complies to ICMA standard. I think many of the PRC issuance is adopting their own domestic standard. So we only consider those ICMA compliant social bond issuance in these statistics. Next slide, please. In this chart, we can see the structure more closely. Let's first focus on the chart on the left-hand side, the bar charts. The bar chart shows the 3 types of ESG bonds and then their country structure in the region. So in terms of green bonds, the very first bar, PRC dominates the green bond market in the region, followed by Japan, Korea, Australia. And then the third bar is social bonds. So we see Korea and Japan are leading, followed by Australia, PRC. And then in the middle, the second bar is sustainability bond. So Japan, Korea are leading again, followed by Australia. Philippines and PRC are also relatively large issuers in the region in terms of sustainability bonds. On the right-hand side, the pie chart shows the issuer type in Asia. So similarly to global situation in Asia, nearly 80% of the issuers are government-related agencies like government guaranteed, government-owned, local authorities. And then the remaining 20% is from the private corporations. And then among them, around half, 10% is financial institutions. So that is the current structure. But this is just the starting stage. Along the market development, we hope to see more pure private sector issuers in this market. Next slide, please. So we have been talking about the market structure. From this slide on, we will be talking about the impact being covered by social bonds. So far, the global social bond market is adopting the ICMA standard. So ICMA compliant social bonds can be aggregated to different SDG links, and then also ICMA social bond principle SBP project category. However, in terms of impact reporting and impact metrics, different issuers may show a quite different practice. Although ICMA is proposing some harmonization actions. This table is just to show an example. So we have 3 social bonds listed from Asia here. All are focused on SME factors. But what we can see is their SDG linkages can differ significantly from each other according to their elements. And then also their reporting impact metrics also differs. For example, the Japanese bank, their reporting metrics is focusing on total loans, the number of loans. PBI's social bond, number of SME loans, total value of SME loans. And then in the case of Thailand Bank, because they have a gender elements, so they focus more about employment generated through women-owned SMEs. So the impact metrics can differ quite significantly across issuers. That also highlights the complexity in the social bond market development. This is a very important issue for social bond markets. Next slide, please. This slide is about the impact being addressed by the current global social bond markets. So let's take a look at the right-hand side chart, pie chart. In the pie chart, this pie chart shows the top SPB impact areas covered by the current social bond market. So what we can see is the largest, the top impacts covered is unemployment alleviation, 24%. The dark blue bar, the black bar, the black area, followed by affordable housing, 20%, health, 12%, education, 19%, SME finance, 14%. So these large areas actually reflects some recent momentum of COVID-driven social bonds demands. You can see unemployment, health, education, and SME financing is largely driven by the 2020 expansion. This can also be echoed by the bar chart on the left-hand side chart. So we see 2017, 2018, 2019 in the three bars, first three bars, we see a relatively even distributed across different categories, impact categories. But the 2020 bar, while we see a huge expansion in the market, we do see that there are some leading areas to be supporting the market development. For example, unemployment alleviation during the crisis, SME finance, education and training. Education and training is also largely supported this employment action, health, and then also affordable housing. So the current areas, social areas covered is also reflect the market expansion driven by 2020 COVID. Next slide, please. If we turn to SDGs, the pie chart on the right-hand side shows also the SDGs related to COVID-19. So the top social areas linked to SDGs, decent work, this SDG number 8, sustainable cities, SDG 11, 19%, health, COVID-related, SDG number 3, 16%, and then also no poverty, SDG number 1. So they reflects the demand from the COVID, and then the left-hand side bar chart also reflect the same thing. So we see the fastest growth, economic growth, work, decent work related unemployment, SDG 8, green ones, SDG 3, health, and then SDG 1, no poverty, is more on inclusiveness. So it is all reflects to the COVID-driven social bond market expansion in 2020. Next slide, please. How about Asia? We try to compare Asia's actual social bond impact allocation versus some benchmark. The benchmark is the social bond framework reference. If the Asia's social bond impact allocation is following the social bond framework reference, we will expect to see all the dots, all the impacts should fall on the line in the middle of the charts on the right-hand side. And what we see currently in Asia, some dots are above the line. So that means the actual allocation is above the reference. For example, transportation, 26%, SME, more than 1/3. So these are areas that is over allocated relative to the reference. Then there are some areas under allocated. For example, the dot below the line, health, 3%, food and security, water sanitation, education and training. So these are areas that is currently under allocated in terms of impacts in Asia. And then these areas offers the greater potential for Asia issuers to further pursue, because these areas offers more diversification benefits to the investors as well. So that is current Asia's impact. Next slide, please. Okay, this is the last slide I'm going to talk about way forward. So currently Asia's social bond market is leading by Korea and Japan, both a relatively large social bond market, second to France. If you see the market size on the left-hand side chart, Korea, Japan is individual markets following France. They are relatively large social bond markets. And then they are both dominated by issuers focusing on housing, SME financing, and education. Korea actually sets some feasible model for other countries to follow in Asia. For example, in Korea, the issuers still largely come from the government agencies with some social mandates, which is easier for other countries to replicate. And then also in terms of the project allocation in Korea, employment, essential services, and also housing. These are areas that other Asian countries may also wish to pursue. So other Asian countries may consider following the case that Korean is setting up their social bond market, because Korea anyway shows the fastest growth in 2020. That is largely what we found in the report. Thanks for listening. Thanks.
Thank you very much, Grace, for your presentation. You know, I'm still processing what my mind has been receiving the last few minutes. And what ADB has really presented to us is really a very rich buffet of green dishes. And obviously we will need to talk to each other again even after this event. But while the others are thinking of their questions, may I ask the first question, and may I request Pok, could you go back to your slide where it shows financial institutions, central bank, and government. I think that was slide number 7. Are we getting there? Somebody doing it for us, please. No, back please, Sabar. Move on, please. Move on, please. Where you have these 3 financial institutions, central bank, and government. Yeah, that's the one.
This one.
That's the one. Thank you, Paul. Well, my question is really addressed to both Robert and Paul, but I'd like this to have as a background, because Paul was saying about momentum and collective efforts. But I will address this question first to Rob Fowler. Rob, you have worked with Climate Bond Initiative, and now you are working with ADB. Now, these 2 institutions are doing their own thing about how to achieve the ultimate objectives of mitigating the harmful effects of climate change. But what ADB and Climate CBI are doing are really different. Yet, we probably realize that some government intervention is necessary to achieve the common objectives. So my question to both of you, Pok and Rob, is how do you see is the best kind of intervention the government should be doing to make ADB's and CBI's efforts more effective of results? For example, is a formal structure of cooperation and coordination perhaps required to delineate specific roles for each party? In other words, role identification. And for us credit rating agencies, if we have that, perhaps CRAs like ourselves can better identify where we can fit in the joint efforts to address the climate change problem. Because this is such a big effort and we want momentum. So would it be better to have a clearly identified roles? I mean, to everybody, not just to ourselves. And what is the best way the government can intervene? Or should we want the government to intervene? I know it's a big question, but answer it the way you want it. Rob?
Thanks very much. Thanks for the question. I think at the moment, what we're seeing is that governments are moving forward and they're giving signals. To me, one of the biggest motivators is government changes, but depends a little bit on the context. So, for example, in China, the government said, we want to see green lending all the way back in 2009. And so over that time, the banks in China started to build up their portfolio of green lending. Then when the government said in 2016 or late 2015, here's how to do a green bond, we would like you to do these, all the banks were ready to go. And they went out in a massive scale in the first year because they had all that green lending experience and they had all that green stuff on their books. So to me, the banks are an enormous motivator and driver of this progress. If banking teams and securities teams are saying yes, yes to their clients, green's good, sustainable's good, let's do it this way. If they're motivated to do that, maybe it's an internal mandate or some sort of bank KPI for their people, then that motivates the issuers to do it. That then flows through to a lot more transactions. And to me, that's really where you get the momentum. So the key role here for me is the people who make these transactions happen, people who help with capital raising, they're a key part of it. And the government can help to stimulate them by encouraging the banks to have internal targets or to have some sort of target for a proportion of green in their book or something like that. So if the governments can mandate the banks to have a certain green drive, then that to me is probably the most powerful thing the governments can do. They can also set up regulatory arrangements and they can, make it smoother and enable things. I think training of all the people involved is great, but to me that incentive for the bankers, that could change the world. Thanks.
Okay. What's your take?
Thank you, Mr. Dumlo. Actually, I would agree with Rob. I mean, the most important policy that the government can come up with to come up with a clear policy guidance on what they want to achieve. I don't have it on my slide, but there's one slide that is quite powerful to convey this message, because if you recall, in ASEAN we have the ASEAN Green Bond Standard that was issued by the ASEAN Capital Markets Forum in 2017. And before that, the green bond market, I would say, did not really exist in ASEAN, right? But when the regulators came together, by the way, the ASEAN Capital Markets Forum is a grouping of the securities regulators of the 10 ASEAN countries. And they came together and they developed the ASEAN Green Bond Standard that was in alignment with the ICMA's Green Bond Principles, and then they launched it in 2017. Suddenly, we saw a significant growth of the green bond market in Southeast Asia. And some people often think about, the government needs to provide subsidies because, as I said in one of my slides, that issuing thematic bonds actually incur additional costs. But personally, in my opinion, that may not be as powerful as strong message from the authorities. We see in the Philippines, as you know this very well, Mr. Dumlo, that the Philippines, we have seen lots of thematic bond issuers from the Philippines, and mostly are banks, and many of them are regular issuers of thematic bonds, right? And we do not even have these subsidies or the grant schemes provided by the government. But what we have seen is the SEC has continuously communicate with the industry of what they want to see. That's why the size of the thematic bonds in the Philippines is quite significant as compared to the other ASEAN countries. So I would say the strong policy support is for governments or the authorities to come up with the clear strategic guidance on what they want to achieve. That's my take. Yeah.
Thank you, Pok. Farial, I know you have a question. Would you like to raise your question now?
Yes, thank you very much. It was a very interesting morning for us here in Pakistan with all of you. Rob, I'd like to ask you, and I'd firstly like to thank you for a really fantastic presentation. I think it kind of cleared lots of these webs that we still have in our minds regarding what sustainability is and what green is. My question to you is just to understand that is it necessary actually to have a uniformed criteria or standard for green or shades of green I mean, we do know that, for example, China has their own green bond guideline. India has also come up with one. Pakistan is a little behind. We've been talking a lot about green, but there's not a lot of activity about it in the market. But in a region or in all the markets that we are working in, do you think that we need to have the same definition of green, or can everybody work with their own definitions of green? And should there be talk about shades of green? And could ADB help in that matter so that this region could maybe have the same definitions? Thank you.
Thanks very much. It's a great question. So I was speaking before about definitions and how there's I suppose an aspiration, an objective to have definitions that are globally consistent but locally relevant. Now, what we're seeing is that Europe and China and others have got together to create a thing called the International Platform for Sustainable Finance. It's a group that's trying to do exactly that, is to try and create what would be globally green definitions that everyone agrees on, and then have space for local interpretation of some areas and some aspects of what's green or green enough in a certain context of the country. So there's work being done right now to create that, the general taxonomy, and then some sort of ability to adjust for local circumstances. I think definitions are great for scaling up the market. When it's first starting out in an area, then it's the story that's the main thing. And so it's really about trying to help investors to understand what is green about this organization or transaction. And definitions help with that, but it's really the focus should be on transparency and the story. Thanks.
Okay,
right.
thank you. I will interrupt this question and answer session. My fault, but we still have one presentation actually from Mr. Pong Sofol, and I missed that. I was carried away. Pok, may I request you now to make your presentation? It's part of this whole event.
Yep, thank you very much, Mr. Dumlo. And can you all see my slide, right? You know, if given that you know, we are behind the schedule, allow me to go through this very quickly. So you know, Rob has mentioned about, you know, the thematic bond issuance process, and also, you know, Grace has also mentioned about the recent growth in the social bond and sustainability bonds, you know, in developing Asia. So you might wonder, you know, given that you know, detailed process, what ADB can do to help, right? So I wish to explain about you know, our regional technical assistance program that ADB has developed, but allows me to make my remark that this technical assistance program is only available to countries or credit rating agencies in ASEAN +3 only, in the ASEAN +3 markets only. So ASEAN 10 countries plus Japan, Korea, and China, because this is the regional initiative of the ASEAN +3 government. But of course, I know there are some ACRA members who are not part of the ASEAN +3 discussions. We are happy to share the experience of our activities in this region. And of course, if you feel that, you know, some part of these TA programs should be replicated in your respective jurisdictions, please feel free to get in touch with us, or you can also discuss with ADB resident mission in your country. So under the ABMI initiative, this is a structure. ADB, as a secretariat of ABMI, we provide the progress update to the ASEAN +3 finance ministers and central governors on an annual basis. And the work to develop the green bond or thematic bond market is under the Task Force 1 of the ABMI. So under this TA, what ADB can do is we can work very closely with the issuers, potential issuers and underwriters from the very beginning on how to issue thematic bonds. We know that there are many companies out there who want to issue green, social, sustainability bonds, but they don't know what to do. They don't know where to start. And often, you know, as Rob mentioned, the underwriters or the banks are very important because they are the one facing the client. So if the underwriters have good understanding about the issuance process and also the importance of you know, thematic bonds, they'll be the one who encourage the customers to issue this kind of bond. So that's why for our TA, we are happy to work with them as well as the issuers from the very beginning. We can help them identify the eligible projects or assets that can be financed by the bond, and also to review the thematic bond framework, and also to facilitate the discussion with the external reviewers. So these are the pre-issuance process, and what issuers need to do in order to issue thematic bonds. Of course, we are also happy to provide assistance to issuers in terms of internal systems, and also to make sure that they have proper systems to track the use of proceeds, and also to measure the impact bring about by such bond issuance. And also, we are happy to use this TA to help interested entities, or in this case, interested credit rating agencies who wish to perform the role of external reviewer, or those who want to be accredited by the Climate Bonds Initiative as an approved verifier. We are happy to discuss and to explore how we can collaborate that. Recently, we organized the Green Bond Bootcamp, and 2 rating agencies from ASEAN has already been approved by the CBI as a local verifiers. So this is on the supply side. And on the demand side, as you may have heard from Grace and Rob, that we published the detailed guidance for issuers and underwriters who want to issue green bonds. Please feel free to access that on the Asian Bonds Online website. I have included a link here, or you can also scan the QR code on the first page of my presentation. That will lead you directly to the green bond section, and also to the fact sheet that we have just published. And of course, we would want to promote the market practice in developing Asia. As Rob mentioned, the projects in Europe and the projects in developing countries could be different, right, from investors' point of view. And especially for social bonds, it largely depends on the local context. One classic example is to build a bridge over an intersection, right, where countries with significant traffic jam problems, building a bridge over an intersection would sort of help with the traffic conditions and help with the mobility of people. This perhaps can be seen as social bonds, can be seen as financed by social bonds in developing countries. But building the same bridge in Europe or in the US, this may not be seen as social bonds because they don't have similar problems like us, right? So the eligible projects, it largely depends on the local context. And we would like to make this point to the global discussion. And also for issuers that we can support, of course, we would like to publish their experience as a case studies, and we can make that available to the public. And these are preconditions. And as I said, we can only support issuers from ASEAN plus 3 countries. The scope is that we happy to provide assistance, and the bond needs to be at least aligned with the ASEAN Green, Social, or Sustainability Bond Standards of the ACMF, plus other international standards, for example, the Climate Bond Standards or the ICMA Sustainable Bond Principles. And of course, we want to create the market, right? So issuers must be able to demonstrate some willingness to issue thematic bonds on a regular basis. As Rob said, the issuing the first bond is most difficult transaction. So once we have the internal system in place, once we have the framework in place, issuing the second or the third or the fourth bond will be much simpler. And we hope that the issuers that we support will be able to issue this kind of bonds on a regular basis. And of course, we would ask issuers to share their experience. We will conduct interviews with them to learn about their experience in issuing the bonds. And for example, how they could convince the management to issue this kind of thematic bonds, because most often the case, the treasurer would have difficulty to convince the board directors that issuing this kind of bond is good for the company, why it would incur additional costs. So when the management see that issuing this kind of bond will involve additional processes, will involve additional costs, they often say no, right? So it's good to learn from the experience of the existing issuers on how they have go about that challenge. So I will stop here, and I'll show some. This is the web page on the Asian Bonds Online website. You can go to the ABO or scan that QR code on the right hand side. It will take you directly there. And this is the information that we have. There are 12 fact sheets. It's already published and it's available free of charge. So please feel free to access that information. And if you have any questions or if you would like further clarification, please feel free to email us. That's all from me, Mr. Domlau. Thank you very much.